always an internal dialogue in my mind wrestling with bipolarism, wanting to act out, wanting to do things that I know I shouldn't do, and then feeling emotional. Okay, welcome back, guys. This is Tuesday, January 9, 2024. Euro dollar contract, and welcome to my daily videos. I did this content every day. I don't know. I usually repeat this on YouTube because I don't know who is watching this video from the first time. If this is your first time, so this is Digital Wealth Academy, and I create content on Euro dollar and dollar index every day. So let's go into today's business. Now, the Euro dollar daily contract for Tuesday 9 January 2024 did not play out as projected from yesterday market projection, meaning that the euro dollar for today market projection for today did not play out as expected from yesterday's price, like did not play out as annotated from yesterday's price action. So we expected to see uh, euro dollar deliver higher yesterday, but now we deliver lower, taking sell side liquidity. Although it does not change our sorry guys, let me stop this. Although it does not change our higher time frame perspective on of price. Well, the euro US dollar delivered bearish candle for today price action that takes out previous day low and price into the previous weekly candle with consequent encroachment, and reverse back into the daily trading range, meaning that today candle for me, if I'm analyzing each individual candle, every daily candle, I make sure the high of the previous day candle is identified, the low is identified, and the like today now I identify the high and the low. So I'm going to treat each of these parameter as a PDRS, which is my buy side liquidity and my sell side liquidity. Now, going in price, yesterday we wanted to see this buy side liquidity taken, not this sell side. So that is what's the difference from our yesterday projection. So price is bearish for today, that takes out this sell side liquidity and price into the weekly consequent candle consequent encroachment of the week. Now, every week candle, we treat it as a fair value gap or as a PDRS, and we identify the midpoint of that candle. So if we identify the midpoint of that candle, we want to see, or we like to see price respect the midpoint of that candle, and it did occur in price. So we trade into the weekly candle consequent encroachment or consequent encroachment. Now, the overall daily price action is trading at an equilibrium price, which I am anticipating to see the displacement higher as I favor or buy side liquidity. Meaning that if you look at this this color represent buy premium, and this is discount, and we if you see, this is the midpoint, and looking at price, market has been rallying around this, around the equilibrium price. Even currently we are trading at exactly equilibrium price. So whenever market rally into the premium, we come back to discount, rally into the equilibrium, then displace lower or higher. So we can treat this particular scenario as an accumulation. Now, I am not expecting an accumulation and a displacement lower. Rather, I am anticipating for an accumulation and a displacement higher. So since I favor, or since from my own parameters, I favor buy side delivery in higher time frame. Now, that is it for this euro dollar daily contract. So let's go to the dollar index and see what is going on there on the daily market. Okay, this is the DXY, which is the dollar index, and this is the contract for today, January 9, 2024. So we can see that on the dollar index, we take out the buy side liquidity for yesterday price, but we were looking for the dollar index to take out sell side liquidity. So um it is permissible to see dollar index keep pricing into this, and the overall price delivery for the dollar index is trading at what equilibrium price action, go into the premium, come back to equilibrium, price into the discount, go back to the equilibrium. So going on for outward, like going on outward tomorrow, next tomorrow, this week, the rest of the week, I'm still expecting to see the remaining day for this week to deliver lower on the XY and to deliver higher on the euro dollar. So that being said, I hope this explain the daily contract and the daily view for euro dollar market. So let's go to the 4 hours for the euro. So this is the 4 hourly contract for euro dollar market. Now let's go by this. The euro US dollar 4 hourly contract shows how nicely the weekly discount week consequent encroachment rally lower in today price action. That is, it hold price from rallying lower in today price action. How it shows how the week hold price from rallying lower into the price action. The 4 hourly candle begin the nice sell program as it trade into the 4 hour ICT bearish order block formed on Monday 5 o'clock p.m. New York local time candle. So this particular candle did give us the nice sell program for today, and it priced into the 4 hourly bearish order block, which is formed on Monday 5 o'clock p.m. New York local time candle. Then let's go into okay, let's read further. On the 4 hourly, I will be pleased to see the next day price into the daily candle week consequent encroachment, and that's to hold price, meaning that today price, the week low in today price, I want to see it hold price from the consequent encroachment, which is the midpoint of the week, to hold price. Meaning I would like to see price, or I will appreciate if price will trade down into the week consequent encroachment and the price begin to rally higher. Then before we left this particular hourly, let's explain a little concept about this fair value gap, because there's something interesting here I would like to add, or just for educational purpose. Now you see that this particular 4 hourly fair value gap, or BC, which is a bullish fair value gap, BC meaning buy side imbalance, sell side inefficiency. Now whenever price get into it, we rally back upward. Whenever price get into it, we rally back upward. We might wick down, but the body of the candle, which tells us the main narrative, remain above it, or above the consequent encroachment. Okay, so that alone shows that the price delivery for the 4 hourly price delivery is respecting this particular PDRA, and we are still looking forward for the PDRA to hold price. Let's go to the dollar index. So this is the 4 hourly contract for the dollar index, and we can also project same thing with the euro. That's reverse. Now the dollar index has seen a great decline in this inversion fair value gap price from and how it holds price from rallying higher. except the week that we keep waking up. And this particular red line you see here is the midpoint, which is the mid threshold for this 4 hourly um this 4 hourly bearish order block. That is the differences between the low of this particular candle and the high of that candle, which is the midpoint and which is the mid threshold. So we can see how price rally into that mid threshold and price rally lower, rally lower, and that's higher rally into that form the high of today candle for the XY. So that being said, let's go to the hourly candle for Euro US dollar. So this is the hourly contract or hourly price for the Euro dollar, and let's go by this. The Euro US dollar hourly contract shows nicely how market is booked for Tuesday 9th January 2024. Some of you will like why do I keep saying this time or the time of the day since I first said it in the first video? I'm not supposed to keep saying it. Well, it is very important to keep reminding yourself which day you are trading in, which week you are trading in, what month you are trading in. Then so you know, because I'm saying this particular time all the time because I'm trying to keep reminding myself of a particular element called the seasonal tendency. You get if you don't get it, it's not a problem. You will figure it out as we keep progressing. So the hourly contract shows how nicely price is delivered for today. Now on the hourly we can see that euro price into the hourly ICT bullish order block form on form at 3 o'clock AM New York local time on Friday 5 January 2024. Now on the hourly time frame, we can still see that we have an hourly PDRA here, which is a bullish ICT order block that is here, and we can see that today price market price into that hourly bullish order block and tap into the consequent encroachment of the weekly candle wick. Then we have our 4 hourly wick candle here, which is the consequent encroachment for the 4 hourly candle wick. That is the midpoint of the wick of the 4 hourly candle. I keep explaining that particular parameters. So the we project to see euro US dollar price to retest into that 1 hour ICT bullish order block before pricing higher for buy side delivery. That is where I'm expecting using this particular line I put on my chart to see that euro price into this 1 hour bullish order block before we accept price to go higher for today. Now the daily profile for today is an obvious 2 o'clock AM New York local time as the high of the day that trade into a short time fair value gap or CB and price lower afterward, meaning that the high of the day is this particular candle that price into this fair value gap or known as CB, which is sell side imbalance, buy side inefficiency, and price rally lower afterward. Now, the low of the day is formed at 11 o'clock AM New York local time that trade and tap into the discount weekly candle with consequent encroachment and price higher to rebalance price on the hourly price higher to rebalance band. That is the low of the day is this candle that price into the weekly candle consequent encroachment, weak consequent encroachment, and immediately price rebalance and price higher into the daily range. So the on the hourly we still hold the overall perspective to see market price higher, that is to see euro delivered buy side liquidities, okay, to give us buy side delivery. So let's go to the dollar index and explain these two time frame. So this is the um dollar index, and this is the hourly candle for the dollar index. We can see that the market takes out this particular line here is present the previous day high, which is the previous day high buy side liquidity that was taken. And as soon as it was taken, market rally lower and start pricing into the daily range, and price is still trading within the 4 hourly CP. Now it is permissible to see dollar index price into the weak consequent encroachment, the consequent encroachment uh of the weekly fair value gap, also known as CP. So it is permissible to see us weak into this point and rally, and before we see a lower price. Since we have a high impact news on the dollar index on Thursday, which I think is CPI, but I had to check it again to remind myself. So if we see the early market price rally into this particular level, then we can expect to see afterward market to deliver lower and get back into the range. So with this, I've literally come to the end of this video, but before then, let's explain something. I would like to cut this part of the video from cut this part from this video and put on my TikTok, my Facebook, and my Instagram. So if you are watching this part of this video, I do this market review on my YouTube channel every day. So you can, follow the description, follow my channel and get to my YouTube channel, Digital Wealth Academy. So one of the greatest parameters which I dealt with while trading is that I make sure that every individual hourly or every individual time frame, be it the minutes, the hourly, or even seconds, I mark out the PDRs, and not all the PDRs, but the PDRs that support my draw on liquidity. Now, one of the things that you have to know is that you should know how to determine, let's say as a new trader learning to trade, you need to learn how to determine your draw on liquidity. Now if you know how to determine your draw on liquidity, then you can now think of the PDR race, because if you don't know where the market is going to go next, how will you know what PDR race to take? Because if you look at this chart now, there are various there are various fair value gap. Which of them will you use? But if you know your draw on liquidity, then you should know which PDR race is likely to be very effective in price. Okay, which price supposed to respect. And one of the things you need to study again as a new trader, someone that is coming up, one of the things you need to keep at the back of your mind is that you need to understand time and relationship to price. Now, it is time that control price, not price that control time. If you look in school, where if you are taught in school, there's this particular topic in mathematics that deal with graph, maybe projectile. In physics we do that in projectile, but let me not go deep that deal with uh, graph. In your graph you have x and y axis, and the x axis always carry the value, while the y axis carry its own value. But now one each of the value on the y axis has each value on the x axis has impact on the y axis. So is this market delivered? I hope with this content for today, with this part of the video you watched, it gives you an understanding and a brief understand okay, it gives you a brief understanding of how I see price and how I read my price. Thank you for watching, and God bless you. See you tomorrow.